I give three AI models $100 each and 1 week to invest it. Same money, same market, same rules. But by the end, one model stayed calm, one played it safe, and one basically panic bet everything. This isn't really a video about which AI got lucky. It's about which one I'd actually trust when real money is involved. I gave three frontier AIs $100 each and 1 week to invest it for real. Same money, same market, same rules, but I wasn't testing who'd make the most. A week of stock picking is basically a coin toss, and anyone who tells you otherwise is selling something. I was testing who they are, how they behave when the money is real and the clock's running. And here's the thing that genuinely surprised me. Over 5 days, not one of them got a single fact wrong. They read the same headlines, they read them correctly, they knew exactly the same things, and they still fell apart in three completely different ways. Three AIs, same information, completely different behavior. Let's see who cracked. Three contestants, all on their best publicly available settings, all in the same reasoning mode. So nobody got an unfair edge. ChatGPT running GPT 5.5, Gemini on 3.1 Pro, and Claude on Opus 4.8. The rules were simple: $100 each, real trades on eToro, stocks and ETFs only. No crypto, no leverage, no shorting. Every morning, I'd show each model exactly where its portfolio stood and ask one question: hold, sell, or buy. Whatever it said, I did, to the cent. And I added a fourth player that makes no decisions at all: $100 in an S&P 500 index fund, bought once and never touched. The control. The what if you just did nothing benchmark. Remember it. It matters more than you think. One quick honesty note before we start, because this channel doesn't do hype. 5 trading days is far too short to any of these good or bad investor. The winner here got things right and got lucky. So don't watch this as which AI should manage your money. Watch it as a personality test. Play it for real stakes. That's the only thing 5 days can actually tell you. The week opened ugly. Inflation had just hit a 3-year high. There was an active war in the Middle East. Oil was spiking and tech was selling off. Every model read that backdrop perfectly. I checked every claim they made all week against the real news. They were right about the world. Watch what they each did with being right. ChatGPT looked at the market, dumping semiconductors and bought more semiconductors. 4 chip stocks, all in, betting the sell-off was overdone and would bounce. The contrarian, buying exactly what everyone else was selling. Gemini went concentrated and aggressive, energy and defense to play the war, and 40 of its $100 on a single company reporting earning that night. One roll of the dice resolved in hours. And Claude did the careful thing. Spread across defense, energy, and gold. Through funds, not single stocks, to avoid any one company blowing up. And it deliberately held 20% back in cash. The only one of the three that didn't go all in. The hedger. 3 models. The same correct read of the world. 3 completely different temperaments. Disciplined contrarian, aggressive gambler, careful hedger. We're 1 day in and the personalities are already locked. And Gemini's $40 dice roll lands tonight. Gemini's big bet was Adobe, reporting after the close. And here is where it gets interesting. Adobe actually beat. Good numbers, the stock dropped anyway on a surprise executive departure that had nothing to do with the results. Gemini cut the loss. Reasonable, but its explanation missed the real reason entirely. It blamed the AI story it had walked in believing, never even mentioned the actual cause. It made a fine decision for a slightly wrong reason. First crack. Meanwhile, ChatGPT's contrarianship bet started paying off. The bounce it gambled on showed up. The model that fought the crowd was suddenly in front. End of the day 1, ChatGPT leading, Claude quietly up, Gemini last and bleeding from a bet that resolved against it. And nobody had any idea the entire board was about to flip. Overnight, the war de-escalated. A peace deal, oil crashed, and the whole market flipped risk on. Exactly the opposite of the nervous, defensive world 2 of our models held position for. This is the moment that separated them. Same news, 3 reactions. ChatGPT did nothing. Held its winners, the single hardest things to do in investing when you're up, and it just sat there. Gemini blew up its entire portfolio, sold all of it, took every dollar and put it on Nvidia. From a spread of bets to one company, in a single morning, it read the shift correctly and responded by removing every safety net it had. Claude did the thoughtful thing, admitted out loud that one of its positions no longer made sense and rotated out of it. rebalanced towards what was now leading, kept a cash buffer for the next surprise. Textbook, careful, self-aware. And here is the good punch. After 2 days of all this clever positioning, the boring index fund, the one making no decisions, had quietly climbed ahead of 2 of the 3 AIs. The machines were thinking hard. Doing nothing was beating most of them. Day 3, and Gemini's all-in Nvidia bet went flat. Boring. So it paid after a single day and chased 2 of the most volatile stocks on the market instead. It said the quiet part out loud. Quote, a high-stakes catch-up strategy from last place. That's the tell. It wasn't investing anymore. It was tilting. Down, so reach for more risk. Lose, so bet bigger. 3 different strategies in 3 days. And it had never once just held a position and let it breathe. Claude, meanwhile, did something quietly revealing. Trading that boring index fund it bought, basically the index, a Nasdaq tracker, explicitly to close the gap. The most sophisticated thinker in the room reduced to trying to keep up with a fund that does no thinking at all. ChatGPT held. Again, up double digits, didn't touch a thing. One event left that could rewrite all of it. The first interest rate decision under a brand new Fed chair landing the next day. Gemini was sitting in the most volatile stocks it could find. Claude had cash held back specifically for this. One of them was about to look very smart. The Fed held rates, but turned hawkish. Signaled the next move might be up, not down. Markets fell, gold fell, the speculative, high-risk stuff fell hardest. Which is to say, the exact event Gemini had loaded up into, blind, went against it. And the caution Claude had been holding cash for, paid off. Then came the final decision. Last move of the week, and each model signed its name on it. ChatGPT in the lead, sold everything, went to 100% cash, locked the win, and refused to play the last day. The most disciplined move of the entire week was the decision to stop. Claude could the one open position the hawkish Fed had just broken. Said so honestly, anchored on the position that still made sense, and kept a big cash cushion to defend second place. No gamble, the very last move. The careful one stayed careful. And Gemini, dead last, did the only thing left in its character to do. It sold up and bet the whole account on GameStop, a meme stock, a literal Hail Mary in its own words, praying for one wild day to leapfrog everyone. 3 final moves. Lock it in, defend the line, pray for a miracle. You already know these 3. You've known them since day 1. So, 5 days. Here is where they landed. In last, Gemini, down 2.5%. The GameStop miracle? GameStop went sideways, moved barely a fraction of a percent. After a week of betting bigger and bigger, the dice it finally bet everything on didn't even bother to roll. Third, Claude, up 1.8%. The model that never got a fact wrong all week, that grounded every call, caught its own mistakes, built the only genuinely careful portfolio in the room. And it lost to the index fund by 29 cents. The dumbest strategy in the building, buy it and go to sleep, beat the smartest thinker in the building. That hurts to say, and it's the truest thing in this video. And the winner, by a mile, ChatGPT, up nearly 11%. But look how it won. It made a bold call on day 1, and then it mostly did nothing, and then it quit while it was ahead. It didn't win by being the smartest, it won by knowing when to stop. Here is what I keep coming back to. Every one of these models had the same information, and all of it was correct. Not one hallucination, all week. The knowledge was identical, so the knowledge isn't what separated them. Temperament did. ChatGPT had discipline, a conviction, then the patience to leave it alone. Claude had judgment, careful, honest, self-correcting, and so cautious it drew with a coin you could flip. And Gemini had nerve with no brakes. Every read basically right. Every reaction a little more reckless than the last, until it was throwing money at GameStop and calling it a strategy? Same facts, 3 temperaments, 3 completely different weeks. And the honest caveats, because they matter, 1 week is noise. Run this again and the order could shuffle. The world did a lot of the sorting. The war, the peace deal, the Fed. Gemini's reads weren't stupid. The market just kept breaking against them, and then it lost its head. None of this means ChatGPT is a better investor than Claude. It means that over 5 specific days, Discipline beat caution. Caution drew with doing nothing, and recklessness lost. And the one finding I'd stake the whole video on: two of the three smartest things we've ever built got beaten by a strategy that involved no thought whatsoever. Keep that in your pocket next time someone tells you AI is about to run the market. If you want the one sentence to take away, it's this: three AIs got the same facts for a week, and the only thing that separated them was how they behaved. I run honest tests of AI tools on this channel. No sponsorships, dressing up the verdict. If that's your thing, subscribe, and I'll see you in the next one.